October-November 2022, paper 12. The last part we are going to do today. Question number 21. Which cost can be classified as fixed cost? Fixed cost means the cost which will not change. So they are given the answers like bank overdraft interest. Bank overdraft interest will change. That is not the fixed. Piece rate labor cost. It will change depend on the number of pieces. Sales commission always gives on the sales. How many sales are given? That also not fixed. So the correct option, telephone rental. Telephone rental is classified as a fixed asset. So the correct answer is option D. Question number 22. An employee works 40 hours a week at an hourly rate $8. She receives bonus of 30% of the hourly rate. She will receive the bonus of the 30% of hourly rate when time saved producing each unit. If she save any time on each unit, produce the extra time what she saved, she will get the amount of 30% of the total hourly rate. The target production time is 30 minutes per unit. If she could produce the employee could produce less than 30 minutes, she can save the bonus amount also. Last week, she worked 40 hours and produced 90 units. What were her gross earning? The question is to calculate gross earning for the week. What is her gross earning for the week? So let's do the problem. The first one, how many hours and how many units she produced? How many hours she produced and how many units? It means they are given 40 hours she has taken to produce 90 units. So first we can check how many hours required to produce 90 units. To produce 1 unit is, what is the timing? To produce 1 unit, they are given the time 30 minutes required to produce 1 unit. So to produce 90 units, how many minutes required? To produce 90 minutes, 90 multiply 30, that is 2700 minutes required. 2700 minutes means divided by 60. How many hours? 45 hours required to produce 90 units. But the employee produced this within 40 hours. So how many hours he saved? He saved here 5 hours are saved. 5 hours saved. So each saved hours, how many they will get? If he saved any time, he will get the bonus of, how much is the bonus? 30% of the hourly rate. 30% of the hourly rate. So 5 hours, what is the payment of 5 hours? Per hour 8. So 5 multiply 8 is equal to 40 hours. So 40 hours 30%. 40 hours multiply 30% means 30 divided by 100. $12 extra he will get. So the question is, what were her gross earning for the week? Extra he will get 12 and actual amount is how much? 40 hours he worked. So 40 multiply 8. $320 is the hourly payment plus bonus is 12. So total is 320 plus 12. 332. So what is the correct option? Option B is the correct answer. Next. A business uses weighted average cost method to value its inventory. If purchase the following units of inventory, they are given the units, cost per unit, total cost. After these receipts, it issued means sold 250 units to production. What was the value of the issue? Value of the issue means unit into price. Unit into price is equal to how many units? Unit is 250. Multiply. What is the price? We don't know the price. So we have to calculate. We have to find the price. How to calculate the price of AVCO? How to calculate the unit price in the time of AVCO? AVCO unit price is equal to total units divide total value, total cost divided by total number of units. Here what is the total cost and total number of units? Total cost is given 3,600 plus 5,760 plus 4,320. The total is 13,680. What is the total unit? 100 plus 120 plus 80 is equal to 300. So we apply this into the equation. Total cost is 13,680 divided by 300 is equal to 45.60. That is the unit price. So now we can apply this in the price. 45.60. What is the answer? Answer is 250 multiply 45.60 is equal to 11,400. So the correct answer is option B. Next. Question number 24. A business provides the following information: month, number of machine hours, overheads. The variable overheads rate per machine hour was 4. what was the monthly fixed overhead cost? The question is, what is the monthly fixed overhead cost? So here, the amount is 34,000 and 67,000 is given. The number of machine hours 34,000 and in April 67,000 in May. In overhead they are given 493,625,000. So first we have to find what is the amount, the variable cost, the total cost is equal to variable cost plus fixed cost. So here the question is to calculate the fixed overhead cost. So the overhead cost is 493,000. This is included fixed cost and variable cost. So first we calculate what is the variable cost of the 34,000 machine hours. So variable cost is equal to 34,000 multiply 4. 34,000 multiply 4 is equal to 136,000 is the variable cost. But what is the actual cost given here? The actual overhead cost is given 493,000. So the remaining amount is fixed cost. So fixed cost is equal to total cost divided by total overhead divided minus variable cost. Total cost is how much? 493,000 minus 136,000. What is the correct answer? 357,000. So the correct answer is answer option D. Next, question number 25. A business absorbs its fixed overheads using direct labor hours. The following information is provided. They are given actual and budgeted. Overhead they are given, labor hours they are given. What statement is correct? Here they are given overhead absorbed, underabsorbed or overabsorbed. Underabsorbed means if the budgeted overhead is less than the actual overhead, that is called underabsorbed, while if the budgeted overhead is more than the actual overhead, that is called overabsorbed rate. So first we have to check what is our absorption rate. Here the budgeted was 12,700. The overhead was 508,000. So first we have to calculate the budgeted overhead rate. Budgeted overhead rate is equal to 508,000 divided by 12,700. How much it comes? That is 40. 40 is the budgeted overhead rate. Next, now we have to calculate the budgeted overhead rate to produce the labor hours 14,300. The 508,000 is the budgeted overhead for 12,700 unit. So what will be the budgeted overhead rate for 14,300 flexed budget? That is 14,300 multiply. The budgeted rate is 40. The budgeted rate is 500 72,000. This is 572,000. But what is actual overhead rate? Actual overhead rate is given 600,000. But the budgeted overhead rate for 14,300 labor hours is 572,000. So that is increased or decreased? The budgeted is less. Budgeted is less, actual is more. So this is the budgeted, actual 600,000. So 600,000 is more. How much is the more? So budgeted is less, actual is more means under absorption. If the budgeted is less, actual is more, it means under absorption. So what is the difference? 6 lakh under absorption is equal to 600,000 minus 572,000 is equal to, what is the amount? 28,000 under absorbed. So the correct answer is overhead were under absorbed 28,000. Option B is the correct answer. 26. A company sells single product 24 per unit. Selling price is 24 per unit. The variable cost given $8 per unit. Selling price $24. Variable cost 8 per unit. Now fixed costs have been absorbed based on normal activity level 1000 units 6 per unit. It means fixed cost will be each 1000 units they are calculating. So that is 6 per unit. So what is the profit under marginal costing if the company makes and sells 1250 units? So the profit under marginal cost is equal to marginal cost profit is equal to sales minus variable cost is equal to contribution, then contribution minus fixed cost. First we calculate the contribution, then contribution minus fixed cost is the profit as per the marginal costing. So what is the contribution here? Contribution is given 24 is the selling price, 8 is the variable cost. So contribution per unit is equal to 24 minus 8, that is 16. So to produce 16, when the company produce 16, what will be the contribution to produce? 1250 units. What will be the contribution? 1250 multiply 60 is equal to 1250 into 20,000. 20,000. What is our question? What is the profit? What is the profit under marginal costing if the company makes and sells? So now the contribution is 20,000 minus fixed cost. We have to calculate the fixed cost now. We are just calculated the contribution. So fixed cost is equal to, here to calculate, here the fixed cost is given for 1000 unit, 6 per unit. Here we have 1250 unit. They will calculate the fixed cost 1000, 2000, 3000, each 1000 unit. So we have to take the fixed cost 1000 unit only, 1000 into 6. 6000 is the fixed cost. So contribution minus fixed cost is equal to profit. So 20,000 is the contribution minus 6,000 is the fixed cost is equal to 14,000 is the profit as per marginal costing to produce 1250 units. Option C is the correct answer. Next, 27. A product has the following revenue and cost per unit. They are given selling price, marginal cost. What is the contribution to sales ratio? Question is contribution to sales ratio. So first we have to do the equation to calculate contribution to sales ratio. So the equation contribution to sales ratio is equal to contribution divided by sales into 100. So we have to do the contribution. Contribution is equal to sales minus variable cost. Sales minus variable cost is equal to, here the sales is given 40. Variable cost means marginal cost. This is variable cost 22. So 40 minus 22 is equal to 40 minus 22 is equal to 80. And now we can apply to the equation C by S. C by S. C is the contribution is 80. Sales is 40. So 18 divided by 40 multiply 100 is equal to 45. 45%. So the correct answer is C. C is the correct option. Next, 28. Which statement about cost volume profit analysis, CVP analysis, are correct? It applies over any period. It applies over any period. No, it is in the time of marginal costing. This first option is wrong. It's suitable for any range of output. No, it is not suitable to any range of output. Then profits are calculated using marginal costing. Yes, as per marginal costing, we check the cost and the change in the volume. When the change in volume, what is the cost? Then when the change in the cost, what will be the profit? The analyzing of these three changes study. So the correct option is 3. So which option? 1 and 2, 1, 2, D. The 3 only, the point 3 only is the correct answer. Next, question number 29. total cost at two levels of production are as follows. 10,000, 16,000, and they are given the level of production cost. Cost is given and unit is given. Fixed cost will increase. Here they are saying something. Fixed cost will increase by 30,000 when if the units are produced more than 20,000 units. What were the total cost? They are asking the total cost to produce 25,000 units are produced. So, if it is increasing more than 20,000 unit, it will be increasing the fixed cost 30,000. Then, what it will be if there is 25,000, it will increase 30,000, right? Because the rule is more than 20,000. So, what all we have to do here? First, we have to calculate the fixed cost and variable cost. The first step, calculate fixed cost and variable cost. Then we have to just apply to the equation. So to know the variable cost, here they are given to 10,000 unit cost, 16,000 unit cost. Both units, the fixed cost will be same. But only what will be the variable? Variable cost only will change. Fixed cost will not change. So, if to produce 10,000, 230,000, while to produce 6,000, 320,000. So, to produce extra 6,000, when it become from 10 to 16,000, what is the amount to produce extra 6,000? That will be our variable cost. So we can calculate first variable cost per unit. So here to produce 6,000 extra, how much extra we are spent? 230,000 minus 320,000 and 16,000. So to produce 6,000, our cost is 230,000 minus 320,000. So, extra cost 320,000 minus 230,000, that is 90,000. 90,000 is the cost to produce 16,000 minus 10,000, that is 6,000. So, to produce 6,000 extra, 90 is the cost. So, what will be the cost per unit? 90,000 divided by 6,000, that is 15 is the variable cost per unit. You are clear? This is the variable cost per unit. So now we can calculate what is the fixed cost. If the 230,000 to produce 10,000, what will be the fixed cost? First we calculate 10,000. What is the variable cost to produce? Then the extra amount will be the fixed cost. So here variable cost 10,000 production variable cost we calculated 15, that is 1,50,000, but the total cost is given here 2,30,000. So 2,30,000 minus 150,000, 230,000 minus 150,000 is equal to, that is our fixed cost, that is 80,000. So fixed cost is we calculated 80,000. So now we have to apply this into our question. 25,000 unit. What is the variable and fixed cost? 25,000 unit production, 25,000 multiply variable cost is equal to 50 is equal to 375,000. Next, what is our fixed cost? Fixed cost is fixed to all the unit. Whatever the unit, when the unit change, only variable cost change, but fixed cost never change. Here, as per the question, if it is increasing more than 20, they will add 30,000 with fixed cost. So here we have 25,000. So our fixed cost is equal to 80,000 plus 30,000 because our units are more than 20. So 30,000 is equal to 110,000. So the total cost to produce, our question, total cost to produce 25,000 is equal to 375,000 plus 110,000, that is 485,000. So the correct answer is B. Now the last question. Which are benefits of a budgetary control system? The budgetary control benefits. It can be used to control expenditure. Yes, the budgetary control, it will help the business to control the future expenditure and current expenditure. It can be used to record accounting transaction. No, budgetary control is not used to record accounting transaction. It will not help because budgetary control only mainly it is showing our cash transaction. It can help when applying for a loan. Yes, business can check. It can identify where improvement are required. They know how to do the budgetary control. So the correct answer options 1, 3, 4. The first one wrong, second wrong. Yes, option C is the correct answer. Hope you are clear with this video. This was a subscriber requested video. Hope you are 100% clear with all the solution. If you are not subscribed my channel yet, please subscribe and share with your friends who are doing AS level accounting. All the best on your coming examination May-June session. Thanks for watching.